why we're wearing suits today. It's because we got confirmation that the bull market is broadening from Cathie into growth, precisely. We got to speak into the mic there.
It's a go.
It's a go into growth. Here we go, Tesla. Here we go, RTP, which we're going to pull up on the screen right now.
We told you guys we were going to talk about it last episode, and we told you we're just going to postpone it to this episode. We're gonna talk about it this time.
Yeah, we keep our promises.
Yeah.
So it's an all-electric air mobility. Elon Musk has been talking about doing this. He talked about it a little bit on the Joe Rogan podcast about electric air flying. But this is a taxi for people who want to get to a place really fast. So it's like a mini helicopter in a way. So let's go into it. This is under the ticker, by the way, of RTP, Reinvent Technology Partners. It's doing a SPAC. So you've all heard about SPACs. You don't have to really explain it, but it's going to merge. This Reinvent Technology Partners is going to merge with Joby Aviation, and then it's going to be under another ticker symbol of probably Joby, but we'll see.
We're also going to talk about NFTs again, but specifically the first tweet that Jack Dorsey, the CEO of Twitter, ever tweeted back in 2006, and how it just got sold for $2.5 million. We're going to talk about why that's pretty big, and
it's huge for the NFT market, actually, for Jack Dorsey backing that up.
Yeah, I mean, he's been trying to integrate crypto into Square or his companies or Twitter really for the longest time. So I'm really glad he found his way here, and I think it has really good potential. We're also going to be diving into
A little bit of bonds.
A little bit about
bonds.
You've been hearing bonds a lot in the news and in headlines right now, and it's like, what are bonds? I mean, they can sound pretty boring, but the mechanics around it or behind it are actually quite interesting. So we're going to cover that.
And that also will affect the growth stocks. I mean, for you, if you're listening to this, you're in growth. If you're invested in Uber, sorry, that's not a value play. That is a growth stock. If you're in, well, now if you're in Disney, it's kind of like you got the best of both worlds. We'll get into that in a little bit. But first, let's talk about Cathie Wood. She just put out a video on how, basically the bull market is broadening. She had an interview yesterday on CNBC, just to give you some context. And she talked about how, like, hey, everybody on CNBC was like, oh, Tesla's down. Why are you so, I knew it was a bad stock, whatever. And
you're worried. You have so much exposure to all these growth stocks. I mean, all your ETFs are down. 139 out of your 164 stocks are, dipping hard. What are you going to do?
Exactly. It's
a bubble.
Exactly how people were freaking out. And then, people are selling out of these companies like Tesla and Growth, and they're buying stocks like Coca-Cola, a little bit of Boeing, basically the stocks that are, what are we calling them? The reopening stocks? I forgot the name that we're
Rebound.
The rebound stocks.
Rebound stocks, yeah.
So let's watch this video real quick on her talking about
Joining
this.
us now for a first on CNBC interview is ARK Invest CEO Cathie Wood. Cathie, welcome back to the show. Good to have you.
Great to be here, Sarah. Thank you.
It's been amazing to watch your rise and your funds rise over the last year, and yet the past few weeks have been absolutely brutal. The ARK Innovation ETF down 31% from the recent highs. How concerned are you about these rising interest rates and what that's doing to a lot of your high growth companies and the questions about valuations? Sure.
Well, we've been struck that the market never priced in 0.5, 1, or 1.5% interest rates. We think the market never believed interest rates would stay down here. And so it over time, we believe, has used sort of a normalized 3 to 5%. So we don't think that is why the market is correcting here. We do think the speed of the increase in interest rates is scaring people. It became very comfortable in a low interest rate environment, nothing much changing, the Fed has our back and so forth, to become involved with the market. And I think this has shaken a lot of investors up, perhaps. And I would say even in the bond market in particular, we've been in a 40-year bull market in bonds. So I think there's a lot of confusion, and I think there's a little bit of paralysis here. I also think that there is a very rapid rotation now into value stocks. We've seen energy up year to date 39%, financials up about 16%. Those are traditional value sectors. And so I think that's been part of the reason for ARK's setback. But if I could add a little perspective to this, this happened to us in the fourth quarter of 2016 as well. Right after President Trump was elected, the stock market took off because tax rates were going to go down and so forth. And so the market started pricing in a very strong cycle, which was correct. In that period of time, our strategies went negative. And what I said at the time and what I believe now is that the bull market was broadening out to incorporate value or more cyclical sectors. And I thought that was going to be very good news for our strategy longer run. The worst thing that could have happened to us was another tech and telecom type bubble where the market narrowed so that only a few groups won. Right now, the market is broadening out, and we think in an underlying sense, the bull market is strengthening, and that will play to our benefit over the longer term.
Okay, so almost like weeding out?
Yeah, I mean, it's becoming less risky. I mean, it's in a sense, because she was saying the 10-year Treasury bill, it's growing. Like, as we'll pull it up here, if we'll look at the chart, basically, so that video was on March 8th. Today's March 9th. The day of this recording is March 9th, everyone. Bond yields hit 1.61%, the highest it had ever hit. So Tesla was at $550, which is one of ARK's biggest holdings.
10%.
So, but that coming down from the price of 800 over a course of 3 weeks is a good thing because it de-risks your investment. Realistically, when stocks are only going up and only going to the moon, it becomes more risky to hold that stock because that crash could be imminent. And and that's what she means that the bull run for the growth sector is broadening. It means it's just becoming less risky. So in a sense, this is a very positive outlook, as Cathie Wood just described. And also after today, the bonds went down. The Fed had a auction. They were auctioning off some bonds. Today they were selling bonds, and it did very well. And for those of you simply, just to understand, we won't get into the mechanics of it, but when bonds sell very well, a lot of people want them. The yields, the interest rate, what you get paid out for owning that bond goes down. So that's a positive thing. People in Japan, people in South Korea, people in the United States have been buying these bonds, and it went down. So it's a terrific thing for growth stocks because now it's chilling out. The bonds are chilling out. The growth stocks that were intense valuations have also come down, de-risked, broadened in a sense. And now growth has come back. Tesla today had one of its best days that it's had since, I believe, October. Let's look at Tesla stock. It just bounced, I believe, 15% in a day today. And that's a pretty big move for a company like Tesla.
And we kind of needed this correction, right? The growth stock market was going up way too much without a correction. And when a correction happens, people, there's FUD, there's fear of uncertainty and death. But what people don't understand is that these stocks need a consolidation period. We need a breather for them to actually develop more value and kind of solidify that value and price in that value in order for it to keep going back up. So with the bonds decreasing now, growth stocks are going to see an increase, mainly due to the relationship between the two, right? So people with a lot of money, they want to put their money to work and make them more money so they can hedge against inflation. But they want to do that in the safest way possible. So what really is the safest way when it comes to bonds and growth stocks? Well, when bond yields are higher, that is a lot safer, right?
Yeah,
because
that affects the growth stocks pretty much because it's like becomes more safe. You get more money for holding your government. You get more money for holding your money with the government.
And you can always trust the government to pay you back.
at least the United States government,
Right.
not necessarily.
Right,
We don't know about any other treasury bills, but the U.S. Treasury bill is the safest because the world's currency, the reserve currency of the world is the U.S. dollar.
Mm-hmm.
So that's also a very good sign.
And so the more attractive that bonds become, it makes sense that growth stocks are going to suffer a little bit in their price. They're going to have a dip. That's where, you know, you might see a good opportunity to actually buy the dip, because as bonds, it's a
Inverse relationship.
it's an inverse relationship. Perfect.
Yeah.
So bonds are going up, maybe get into growth. Growths are going up, maybe start getting into bonds. Or actually, maybe not getting to bonds.
Yeah, we don't need, I mean, people like us, like people our age, young people who don't have many wrinkles on their faces and not many gray hairs.
Right.
Growth is the best place to be, and preferably being in stocks is also fantastic. Cathie Wood also alluded in this interview, talking about how the whole 60-40 portfolio split is kind of outdated, and how you might want to make 60% equities, meaning stocks, and 20% bonds, and then 20% crypto, like Bitcoin. She alluded to that fact, and hey, I wouldn't disagree with her. It's hard to bet against Cathie Wood, especially after her incredible returns.
I'd say it's a good level of diversification. I mean, don't take our advice. We're not financial advisors. Right. You will lose money, but
yeah, don't listen to anything we have to say.
Exposure to crypto, exposure to growth stocks at a high level, I think, are a pretty safe bet right now in the current temperature of the market. Bonds definitely have some exposure, but I mean, I wouldn't worry too much about bonds unless, you know, you have a good sum of money that you want to put into a safe investment.
Yeah, bonds are big money.
I mean,
that's like government style money. That's like billionaire money.
Yeah.
Where you just like want to keep it safe. And I mean, if we're talking about inflation, at least in the United States, that Jerome Powell has repeatedly said he's not going to raise rates. He might raise them later, but he's not going to raise rates. And bond yields being at 1.5%, he says that inflation, they're trying to keep it around 2% to 2.5%. 1.5% a year over 10 years isn't really going to outpace inflation. So it's not even that great of an investment either way. Like, you're losing 0.5 point to 1%, you know, every year against inflation. Now, if inflation slows down, then, well, that's also not very good either, because we're kind of deflating. We might be deflating, or we might be just going sideways, and that affects asset prices. So asset prices being stocks, real estate, it's just everything. It's not very good. That's kind of a deleveraging, and it's not necessarily the most positive.
So if these people with a lot of money are actually losing money if they go into bonds with the current inflation rate, what would be the next safe haven for their large amount of money to invest in?
Coca-Cola. Coca-Cola has a great dividend yield. Yes. It's a company that has been around for a long time. Everybody loves Coca-Cola. Also McDonald's. McDonald's is a great value play too. They pay out a dividend. Let's see.
And
exactly.
Disney, right? Doesn't Disney pay
Disney, I believe I don't know if they removed their dividend, but but they're more of like a growth and value play, because
Disney's interesting.
Yeah, Disney is great because they're in the streaming, they're always innovating. Let's see Coca-Cola's dividend. So their dividend is 42 cents. Oh, so it's 3.3% a year. So hey, if you're trying to beat inflation and make some money on the side, 3.3% a year isn't half bad, especially when inflation is at 2%, 2.5%. So you're making at least 1.3% to 0.7% a year, something like that. My math's I'm really bad at math, but still, it's decent. Then you have Pepsi. Pepsi is also a good one. These are basically the stocks that people are talking about, value stocks. When people when you see on the news all the time, CNBC, oh, there's a rotation out of growth and into value. They're talking about this. They're talking about people are selling their Tesla. People are selling, big hedge funds, big money selling their Tesla. They're selling their Ubers. They're selling, all these stocks that pretty much are growth stocks, the ones that don't necessarily pay out a dividend and aren't really making profit.
Stocks that basically have their priced in futuristic values, right? So whatever they're promising to deliver in the next 5 or 10 years, whereas in the opposing types of stocks like Coca-Cola or Pepsi, they've already established themselves.
They're consistently making money.
Exactly. Their proof of concept is done. Their proof of everything is done. They have a great track record.
And now they're just growing gradually. They're not explosively growing.
I think the main point to take away from this specific topic is just that don't just have your money. I mean, whoever you are, no matter who you are, don't just have your money sitting in a bank account. Because ultimately inflation is going to get the best out of that, right?
Yeah.
You're going to lose money in the long run. So you're better off just keeping your money in some sort of investment that is going to hedge against inflation, because inflation will eat you alive.
Yeah, a savings account is only offering you like what, 0.5%, a
That's
third
nothing.
of a percent.
That's nothing. Come on, you can do better than that.
Yeah,
If
I mean,
you're listening
look,
to this podcast, I know you can do better than that.
I mean, McDonald's is giving you 2.47, Coca-Cola 3.3. Like, these are great interest rates on your money and then you get a stock. So
and they're relatively safe. I mean, for Coca-Cola or McDonald's to plummet in price, I mean,
there would have to be a fundamental change in our taste buds.
Exactly,
we'd have to,
yeah.
and even then, McDonald's is partnering up with Beyond Meat. If you haven't heard that news, it's a big move for both companies. You know,
they're partnering. I thought McDonald's came out with their own competitive, a while ago. Their own like style.
McDonald's is partnering with Beyond Meat. Let's pull that up. McDonald's and Beyond Meat partnership. Beyond Meat expands. Oh, Walmart. Wait, no. Strikes partnership with McDonald's and Yum Brands. Let's go. All right. So Beyond Meat strikes partnership with McDonald's and Yum Brands. They released that on their earnings date. That was February 26th. So that was a couple weeks ago.
Okay.
Yeah, it was like 2 weeks ago. So that's huge. So
I guess their own version of the veggie burger didn't do so hot. I know they came out with their own version back in 2020.
Burger King.
No, Burger King is actually using Beyond Meat.
Really? Oh, there you go. So Beyond Meat partnering with McDonald's, another great play. So we'll see how that partnership goes. Let's jump right into
NFTs.
NFTs. Yeah.
Or actually, let's segue more into Joby, because that's a growth stock.
Yeah. So Joby, Reid Hoffman, Mark Pincus. Reid Hoffman started LinkedIn. He's also one of the first investors in Facebook. He is running this SPAC. He's the one the head of the SPAC, and he's merging with Joby Aviation. Joby Aviation, for those of you who don't know, is actually invested in by Uber. Uber invested in these people as well. They're really interesting company.
Sense. It's basically almost an Uber, but in the air.
Right. Yeah, it's an Uber in the air. Yeah,
sense.
exactly. They're exactly an Uber in the air. And so, looking at this is just the chart for today. So today they've done fine. I mean, they kind of went up with the whole rotation from out of value into growth, just like how Tesla was experiencing. I mean, this company, it's basically already started test piloting with the FAA in Miami and New York, London, and major cities. They should be by 2025 really into production and making some kind of earnings, some kind of money on the side. Let's see.
So it's a great concept, and I'm surprised we don't have anything like it or have had anything like it sooner. But I'm a little worried about how the pandemic will affect the future of this type of industry, because not a lot of people are going to be traveling as much for work now that a lot of things are remote and there's not as much need. But I guess maybe what they're trying to do is more for tourism, or just trying to get from Florida to California. It's just
purely like an Uber in the air, like a taxi. Uber, like taxi in the air. And look what they got. They got a lot going on.
Pretty sick design.
Yeah, it's sick. Yeah, it is absolutely splendid. Futuristic. Small team, 7 engineers.
Wow.
NASA partnership. Wow, beginning of 2012, Joby was selected to collaborate with NASA on several groundbreaking electric flight projects, including so not only Reid Hoffman and Mark Pincus,
But NASA.
Mm-hmm. But and SpaceX is working with NASA, so they must be pretty alpha. So this is like the future, evidently. Progress towards certification. In 2020, they agreed to G1 certification basis for their aircraft, FAA, laying a clear path to certifying their aircraft for commercial flights. The U.S. Air Force was granted its first ever eVTOL airworthiness approval at Joby as part of the Agility Prime program. So eVTOL, that's is a type of aircraft that uses electric power to hover, take off, and land vertically. Yeah, that is cool. Real future stuff. And then looking ahead, with more than 1,000 test flights behind them, they're looking ahead to breaking ground on their first scaled manufacturing facility later this year, certifying their aircraft in 2023 and starting commercial operation in 2024. So I was a year late on what I was saying. I said 2025, but realistically, it'll probably be 2025.
SPACs right now are kind of in murky waters. I mean, we've had so many in the past year that, I mean, it's just kind of saturated at this point, and a lot of them, don't really end up working out great. But what's interesting about this one is just yeah, it's
another story.
That is another story indeed. But the interesting thing with Joby and the RTP SPAC is that they're backed by incredible entities, right?
Yeah,
you got Reid Hoffman, right?
Yeah, Reid Hoffman.
Reid Hoffman.
From
you have
LinkedIn.
Uber. You have NASA now that we just found out. I mean, that's a lot of good credibility to put your money into this SPAC, which is only, not even barely. It's barely at $11 right now. It's very cheap.
It's literally right at its offering price. So SPACs, whenever they go public, they start at $10 a share. For those of you who didn't know that, SPACs always start off at $10 a share when they go public, and it's
wait, really?
Yeah, that's the base price. Yeah, all of them typically. $10.90. So, and they'll fluctuate, but still, like, it's right there at its opening, and it was just recently named. Nobody, I haven't heard anybody talk about this company.
It's very low key.
March 9th in 2021.
I wonder if that's by design.
This was March 9th. That was today. Today's March 9th. So Fast Company named the world's most innovative, one of the most innovative companies of 2021. And that's huge. I haven't heard anybody talk about this. I love this company. I really like it. I already bought a bunch of shares, but I have to buy more now. I didn't realize how cheap it was.
And with this news.
Yeah, with this news,
just came out today.
So this is a long-term play for sure. I mean, they're only going to... So
if you're looking to get into growth stocks again, you're looking to get into a SPAC, you're looking into getting into cool Uber for the air technology, Joby might be what you're looking for. Not financial advice.
Not financial advice.
You'll probably lose all your money. I mean, SPACs are
money. Yeah.
SPACs are.
You never know whatever happens. But that's what I'm looking at. And so then going from, you want to see the video?
Yeah.
Let's see the video. Watch full film.
Contractor, you will be suspended forward flight momentarily. Copy.
Pretty dope EDM music right there.
Wow.
About to drop.
The production of this video is great.
Pretty sick. I like it.
I love America!
So if it's a bunch of this stuff, oh, this is it landing. Let's go. Come on. That's
wow. Look at that,
Joby.
Very clean.
Let's go, Joby.
Amazing. I'm very curious to see how they're gonna deal with bird traffic in the air with so many of these at a time. But you know, that's an issue
vertical.
for another day.
When have you heard of like a helicopter running into like
Oh, it happens all the
birds?
time.
Birds with
Pretty sure.
helicopters?
Sure. Yeah.
I know with turbines because they're horizontal, moving through the air. But this is, vertical because they're moving through the air
that's a good-
and then getting birds. But you know,
I'm actually curious.
horizontal aircrafts. Hey, I don't know. Seems pretty good to me. But anyway, while Elihu looks up at his prime fascination with birds and
According to the
helicopters-
FFA, birds striking helicopters in flight caused more than 3.5 million in damage and 3 fatalities. There
that's
you go.
nothing.
That's not much. Yeah,
$3.5 million in damage.
for an
Dude.
industry like this, which I mean, I think it's going to be in the billions for sure. That's nothing.
Some birds will be harmed in the making of Joby, but hey, it's all in the light of the betterment of the human race. So,
All right, let's talk again about NFTs because
Yes.
what just happened this past week, I think, I mean, for me, that was a phenomenal idea.
$2.5 million.
2.5 million for a tweet. And, you know, some of you might be thinking that's stupid. I mean, it's just a tweet. Why am I going to own a tweet? Well, people buy live, laugh, love posters to put on their kitchen all the time. And that is, to me, a less significant investment than this because
Live
this
life.
actually holds history. I mean, this is Jack. He's the founder of Twitter. And this is his first tweet on a platform that he created, which is a platform that is, you know, in the multi-billion-dollar valuation. So this has historical significance. And for someone to own this is a big deal because, I mean, if NFTs do make it out to be one of the largest industries of our generation, then I don't see why this wouldn't, you know, fit that paradigm and be like a pattern that what the point of this is to reward creators, right? I mean, creators get paid now through ad revenue from like Google and YouTube and ads basically, but this is 100% margins. So
The highest offer. Want to make an offer? Just letting you know. $2.5 million. Oh, man. He's probably going to give it away to charity. Honestly, he does a lot of things with charity.
yeah, Jack's a pretty cool guy.
Yeah, he's pretty sick.
I'd say he's one of the coolest CEOs of our generation, but he isn't really talked about much.
I wonder how many other people are going to start giving out their tweets. Like
A lot of
and,
people,
like NFTing it.
the issue right now is that a lot of people are selling other people's tweets for money. So, I mean, that's got to get fixed.
Oh,
up.
and for those of you who don't know, Jack Dorsey actually runs Square.
Yeah.
He helped develop Square, which is the company that runs Cash App. Cash App. So, and then Square's been doing some crazy things in the crypto space with Bitcoin and...
Yeah, I mean, Jack Dorsey's been trying to find a way to involve crypto with both Twitter and Square, and he's finally found it with this NFT thing. And, I mean, he recently just merged with Tidal, or not merged, but he bought Tidal, which is the
that was
music
with,
streaming
Square.
service that Jay-Z acquired back in the day for $56.2 million. And so Tidal attracted a lot of high-profile artists to take ownership positions in the platform and market to their fans paid subscription tiers for exclusive content and high-quality streaming. That's some background. But unfortunately, it did not live up to the high expectations and faced a lot of criticism focused on artist compensation and inflated user numbers. So Square bought Tidal, but it was a strange purchase because, I mean, Square is a fintech company and Tidal's like a music streaming company. So
But
really,
no, it's like for NFTing music, right?
it's basically NFTing music.
Yeah.
Right, and that's what the partnership is looking like. I mean, that's Square's. It's going to be like a synergistic relationship where the payments for the streaming service are going to get handled by Square, and then Square gets exposure to this NFT market. But it says here that Square and Tidal together could intermediate record labels by offering artists loans backed by the cash flows associated with their streaming revenue, much like Square underwrites business loans based on merchant cash flows. So ultimately, the partnership can reinvigorate Tidal's original mission, giving artists the opportunity to build relationships with fans by offering exclusive content.
Yeah. And by the way, this is all like this whole NFT thing is a lot of it is held on, we've talked about this on a previous episode, on the interplanetary file storage system, which is like this new basically serverless data storage system. So it's pretty much non-hackable. It's very decentralized. You know, we talked about earlier, for those of you who don't remember, Elihu would store my, you know, non-fungible token of Jack Dorsey tweet in his computer, and then, you know, I don't have to carry it around. He gets paid. Then it goes into another computer or whatever, and it's just moved around with encrypted key and all this other stuff. It'd be something like that.
Yeah, a lot of mathy algorithms that I do not have any idea how they work. But, you know, it's secure. So.
Pretty incredible. I mean, Jack Dorsey's definitely taken a big step forward to validate NFTs. But NFTs have been validated by the market. Thank you very much. So I think that's about it, though, to be honest. Yeah, that's pretty much everything. So let's link up with our Yeet soundtrack. Thank you very much for listening. Don't forget to like and subscribe to the video. If you're not diming handsing, you're a sissy. You're paper hands.
Thank you, everybody. Thank you for listening. Check out our other episodes on NFTs and interplanetary file systems and just crypto in general. We have a few crypto episodes.
We should link those. Yeah, I'll link them in the description.
Yeah.
Peace.